Some mortgage rates cut below 4% as competition picks up. Two major lenders launched mortgage deals on Thursday with interest rates of less than 4% as competition picks up in the sector. The prospect of further cuts in the base rate by the Bank of England has given mortgage providers confidence to reduce their own rates. But the attention-grabbing sub-4% deals by Santander and Barclays will not be available to all borrowers, particularly first-time buyers, and may come with a hefty fee. The return of such deals might prompt other lenders to follow suit after a period of tepid competition. Nationwide, the UK's biggest building society has said it will reduce some of its rates on Friday. Mortgage deals with interest rates below 4% have not been seen since November. Across the whole market, the average rate on a 2-year fixed deal is 5.48%. The typical rate on 5-year deals is 5.29%, according to latest figures from Money Facts. Borrowers have been crying out for better mortgage rates, and we are starting to see them, said Aaron Strutt of broker Trinity Financial. If your mortgage is coming up for renewal soon and you have already selected a new deal, it is a good time to review it and potentially swap to a better rate. Time to decide. Some tracker and variable rate mortgages move fairly closely in line with the bank's base rate, which was cut to 4.5% a week ago. However, more than 8 in 10 mortgage customers have fixed-rate deals. The interest rate on this kind of mortgage does not change until the deal expires, usually after 2 or 5 years, and a new one is chosen to replace it. About 800,000 fixed-rate mortgages, currently with an interest rate of 3% or below, are expected to expire every year on average until the end of 2027. That means a higher monthly bill for many homeowners on their next renewal, but there are signs that the rate they could pay is on its way down. Line chart showing the average interest rate charged on 2-year and 5-year fixed mortgage deals from the 1st of January 2022 to the 12th of February 2025, according to financial data company Money Facts. The average rate on a 2-year fixed deal on the 1st of January 2022 was 2.38%. It then rose to 4.74% on the 23rd of September 2022, the day of former Prime Minister Liz Truss' mini-budget, after which it increased more steeply to a peak of 6.65% in late October 2022. It fell back to around 5.30% before hitting another peak of 6.85% in early August 2023. It then fell to a low of 5.36% in early October 2024 before climbing again slightly to 5.45% on the 13th of February. The trend was broadly similar for 5-year fixes, climbing from 2.66% on the 1st of January 2022 to 4.75% on the 23rd of September 2022. And then peaking at 6.51% in late October, it fell back to around 5.0% before hitting another peak of 6.37% in early August 2023. It then fell to a low of 5.05% in early October 2024 before climbing again slightly to 5.26% on the 13th of February 2025.
Bank of England Governor Andrew Bailey said the interest rate setting committee expected to be able to cut rates further, but we will have to judge meeting by meeting, how far and how fast. This will affect savers who are seeing lower returns, but could bring better news for borrowers. The bank's next rates decision is on the 20th of March. The markets and lenders are expecting more base rate cuts this year, seen through so-called swap rates. So, rates for new fixed mortgage deals are predicted to fall, especially as mortgage providers tend to move as a pack. It was only a matter of time for lenders to bring back sub-4% mortgages, said Rachel Springle from financial information service Money Facts. This is a positive injection to the mortgage market, and when a big lender makes such a move, it can prompt its peers to follow suit with cuts of their own. The millions of mortgage borrowers looking to refinance this year need some good news. Eligible borrowers for the sub-4% rates will need a 40% deposit, which will shut off these deals to many borrowers, especially some first-time buyers. They may also have a relatively large fee, so borrowers will need to check whether the overall value works for them. More demand for homes from buyers could be generated if mortgage rates fall for a prolonged period. In its latest survey, the Royal Institution of Chartered Surveyors (RICS) said that housing market activity was expected to pick up over the coming months following a flat start to the year. Separate figures show landlords have been feeling the pressure from relatively high mortgage rates. Repossessions of properties from landlords in England and Wales hit another record high last year. Both repossession claims, the start of the process, and actual repossessions rose in the final quarter of the year, with cases concentrated in London. That, in turn, could create problems for availability for tenants if these homes are lost to the rental sector.